Welcome back to the deep dive. You know, I'm really intrigued by today's topic, Campbell's.
Ah, yes. A household name for sure.
It's just one of those brands, isn't it? It's so many of us grew up with it. It's really etched in there.
Definitely.
And seeing how they adapt, well, it's always fascinating.
Hmm.
So today, yeah, we're peeling back the layers on Campbell's company.
Right.
We'll look at their latest Q4 and full year results for fiscal 25.
Yeah, the full picture.
And also get a peek into their plans for fiscal 2026.
That's right. And our mission really is to give you a clear sense of what's actually shaping this food giant's future.
Okay.
We'll dig into how they did across, meals and beverages and snacks.
Core divisions.
Exactly. Look at the impact of big moves, acquisitions, divestitures,
Mm-hmm.
and unpack those broader economic things they're dealing with, like tariffs, inflation.
Always factors.
Always. Basically trying to pull out the key bits so you understand what's going on with a company that, well, is in a lot of our kitchens.
Absolutely. So if you've ever wondered how a name like Campbell's keeps those comfort foods on the shelf or, how they adapt to changing tastes and economic hits, you're in for a treat. Can they really cook up future success with all these challenges? Let's dive in.
Let's do it.
Okay, so to kick us off, let's look at that overall financial snapshot. Fiscal year 2025. What's the headline story? What's it telling us?
Well, for the full year, Campbell's reported a 6% increase in net sales, hitting $10.3 billion.
Okay, sales up.
Yeah. Now, looking at profitability, their adjusted EBIT, that's basically operating earnings before interest and taxes,
Right.
saw a 2% increase to $1.5 billion. But adjusted EPS, earnings per share, which is key for investors, right?
Yeah.
Shows profit per share.
Definitely.
That actually decreased 4% to $2.97.
Ah, okay. So a bit of a mixed bag there.
A little bit. But despite that EPS dip, the results were still slightly ahead of what they expected.
Oh, interesting.
Yeah, suggests they maybe navigated things a bit better than thought they might.
That's a good initial picture. Now, I noticed the reports mention a 53rd week in fiscal 25. How did that extra week, how did it actually impact these numbers? Why does that matter?
Oh, good catch. Yeah, the 53rd week, it fell in Q4,
Okay.
and it was, well, a notable factor. It basically gave them an extra week of sales, operations, everything.
Right.
It's estimated it added about 2% each to full-year net sales, adjusted EBIT, and adjusted EPS.
2% across the board.
Pretty much. For EPS, that's about $0.06 per share.
Okay.
So, yeah, a genuine boost to the annual figures, but it's also, a one-off.
Right. What happened in fiscal 26?
Exactly. Important context when we look ahead.
Got it. So beyond sales and earnings, what about their financial health? How are they managing things, returning value to shareholders?
Well, they generated a pretty robust $1.13 billion in cash flow from operations for the year. That's strong, shows good operational efficiency.
Okay.
And for shareholders, they paid out $459 million in dividends and repurchased about $62 million in common stock in fiscal 25.
Okay. Returning value.
Yeah. And what's actually quite interesting for their sort of long-term stability, their leverage ratio.
Ah, yes. Debt versus equity.
Exactly. That measure of how much debt they're using, it actually improved slightly. Went from 3.7 times in FY24 down to 3.6 times in FY25.
Oh, so moving in the right direction.
Yeah, signals a stronger balance sheet, less reliance on debt. Always good,
Yeah.
especially now.
Definitely. Okay, with those overall numbers set, let's dive into the core business. Starting with meals and beverages, what's standing out there?
What's really interesting here is that this part of the business, meals and beverages, it continues to be really fueled by people cooking at home.
Still seeing that trend hold.
Seems so. In Q4 of 25, this segment saw a positive 1% dollar consumption increase and a 0.2 share increase, actually outpacing category growth.
Wow, okay, so they're gaining ground even if the category is slower.
Exactly. And while flat might not sound super exciting, their organic net sales for the full year in M&B were flat.
What you're saying is actually a win.
I think so, yeah. In this kind of market, competitive, inflation, people watching pennies, just holding your own on organic sales shows, brand resilience, good product management, especially as people get smarter about their home cooking choices.
Right, right. So people are still cooking. Campbell's is benefiting.
Yeah.
Any specific brands in that segment really leading the charge? Maybe some surprises?
Absolutely. The big standout is Rao's pasta sauces.
Ah, the Sovos acquisition.
Precisely. That deal closed back in March 2024. Rao's returned to high single-digit dollar consumption growth in Q4.
High single digits. That's strong.
It really is. And it's significant because Rao's is now getting close to becoming Campbell's fourth $1 billion brand.
Wow. Who are
Yeah.
the others? Campbell's Soup?
Yep, Campbell Soup, Goldfish Crackers, and Pepperidge Farm Baked Goods.
Okay, iconic company.
So Rouse joining that group is big. It shows people want those premium, authentic ingredients, even for everyday meals. That's a powerful trend.
He really is.
And overall, their whole Italian sauces portfolio, Rouse and Prego outpaced the category, grew 4% in dollar consumption.
Impressive. Shows that acquisition is working out. What about their traditional soup business? The namesake. Similar trends.
Well, within soup, we saw strength in broth and cooking condensed soups in Q4, again, tied to people cooking at home.
Okay.
The broth category specifically is sustaining growth, both dollars and volume. Campbell's broth and stock actually gained volume share in 7 of the last 8 quarters.
7 out of 8? That's consistent.
Very. And it tells you something about what consumers want now. It's not just convenience. It's like value-driven convenience, maybe, and personalized health.
How so?
Well, we're seeing this rising trend of homemade ramen. It's one of the fastest growing uses for broth.
Interesting.
And about half the usage of Pacific bone broth is specifically to add nutrition to meals.
Ah, okay. So health focus.
Exactly. Campbell's is tapping into these needs, cooking in comfort and health and wellness. So you might start seeing even more versatile products designed for those uses on your shelf.
Makes sense. Okay, so meals and beverages seems to be finding its groove with home cooking. But snacks, that's a different beast, isn't it? More fragmented, competitive.
Oh, yeah, definitely.
Given the category softness they mentioned, how did the snacks division handle those choppy waters?
Well, the snacks business did show sequential improvement in Q4 compared to Q3.
Okay, better than Q3.
Right. Even with that continued softness in the category overall, dollar consumption was down 2% in Q4. Organic net sales also down 2%.
It's still down.
Still down, but the promising bit is that half of their key snacks leadership brands had sequential improvement in consumption and share.
Okay, so some individual brands are starting to turn a corner.
Seems like it. Suggests that while the overall category tide is low, some specific Campbell's brands are finding ways to swim against it.
That's a good sign. Can you give us a sense of which snack brands were the bright spots? Or maybe which faced the toughest time? Sounds like a mixed bag.
It definitely was a mixed picture. On the positive side, Pepperidge Farm cookies gained share.
Ah, the Milano effect.
Exactly. Especially driven by their new white chocolate Milano innovation. You know, the strawberry, lemon, coconut white chocolate flavors.
I heard about those. Sounds interesting.
Apparently they're working. Total Milano's dollar consumption was up a remarkable 27%.
27%. Wow.
And gained half a point of dollar share. So even a classic gets a gourmet touch, right?
Clever way to keep it fresh.
Definitely appeals to that desire for something new but familiar. Fresh bakery, like farmhouse buns and rolls, also held share.
Okay. And the downsides?
Well, crackers, like Goldfish and chips, think Cape Cod, Kettle brand, they faced ongoing macro pressures. Strong competition.
Yeah, tough categories.
Very. Though their share losses did ease up a bit compared to Q3, which is something.
Okay.
Snyder's of Hanover Pretzels also saw declines. But Snack Factory, with their Pop'ems and Bites innovation, that was actually a positive spot within the tough pretzel category.
Interesting.
Yeah, these successful brands, they really seem to tap into those broader consumer needs for it, like premiumization and flavor exploration in snacks.
Right. People want something a bit special, even in a snack.
Exactly.
Okay, it definitely sounds like a dynamic environment, lots of moving parts. What about the bigger economic headwinds? You mentioned tariffs, inflation. How are those specifically hitting Campbell's?
Yeah, that's a critical point. Tariffs are a significant headwind, like an unexpected tax, basically, on raw materials.
Okay.
For fiscal 25, they figured it impacted adjusted EPS by about $0.02.
Not huge, but noticeable.
Right. But looking into FY26, the gross tariff exposure, mostly from Section 232 steel and aluminum tariffs, is estimated at about 4% of their cost of products sold, their QPS.
4% of COPS. That sounds like a lot.
It is substantial. It's the direct cost of making the goods they sell.
So what are they doing about that? Because that hits the bottom line directly.
Oh, they have aggressive mitigation plans. They expect to offset about 60% of that FY26 tariff impact.
60%.
A combination of things. A key part is likely supplier collaboration and finding alternate sources. If they can diversify suppliers, find new places to get materials.
Right. Reduces exposure.
Exactly. But if they don't hit that 60%, the risk is just, lower profits.
Makes sense.
So their levers include strategic inventory management, buying ahead maybe, closer work with suppliers, finding those alternate sources, boosting internal productivity and cost savings, and making very careful surgical pricing adjustments.
Targeted price increases.
Right. And beyond tariffs, they're also managing low single-digit core inflation separate from tariffs.
So general price increases, too.
Yeah. Labor, ingredients, energy, it all adds up.
Wow. Okay, that brings us neatly to cost savings, then. With all these pressures, how are they planning to get more efficient internally?
Yeah, this is a major focus. They've actually increased their big enterprise cost savings target by 50%.
50% increase. From what to what?
From $250 million originally, now targeting $375 million by the end of fiscal 2028.
That's a big jump. Where are those savings coming from?
It's a comprehensive program. Things like network optimization, making their supply chain, manufacturing more efficient, getting synergies from acquisitions like Sovos brands, using technology better, making the organization more effective, and managing indirect spending smarter things, not directly tied to production.
Got it.
These savings are absolutely crucial. They need them to offset those tariff hits and have money left over to reinvest back into the business. Otherwise, yeah, they'd just be treading water.
So they're clearly focused on cutting costs,
Yeah.
getting efficient, but are they also investing in growth? It's got to be a balance for
Precisely.
Yeah.
Their whole strategy is kind of summed up in their phrase, delivering today, build for tomorrow. So it's not just about cutting fat. It involves increasing brand support for core products.
Some are marketing.
Yeah, and elevating innovation that's driven by consumer insights, like we saw with the Milano white chocolate success.
Great.
And selectively investing in digital transformation, making operations more agile, efficient. They've even launched a dedicated growth office just to drive transformative growth across the whole company.
A growth office, okay?
Yeah, they're really focused on delivering value across those different consumer needs we talked about.
Yeah.
Premiumization, flavor exploration, health and wellness, cooking and comfort, basically trying to meet you wherever you are in the grocery aisle.
That sounds like a comprehensive plan. Okay, looking ahead then, fiscal year 2026. What's their outlook? What should we expect, especially with all these moving pieces?
Right, the guidance. For FY26, Campbell's is guiding organic net sales to be pretty flat, somewhere between -1% or +1%.
Okay, flat sales.
But they expect a bigger hit on profitability. Adjusted EBIT is projected to decline by 13% to 9%.
13 to 9% drop. Ouch.
Yeah. And adjusted EPS is expected to decrease even more by 18% to 12% compared to their comparable 52-week FY25 base.
18 to 12% decrease in EPS. That's steep for a company like Campbell's. Are they just being super cautious, or is there something really fundamental going on beyond just the tariffs?
That's a great question, and I think it really speaks to the challenges. The guidance doesn't seem overly cautious. It looks like it genuinely reflects specific things they're anticipating.
Like what?
Well, two main factors driving that projected EPS decline. About 2/3 of it. They're attributing to the estimated net tariff impact, even after all those mitigation efforts we discussed.
So even trying to offset 60%, tariffs are still hitting them that hard.
Apparently so. The remaining 1/3 comes from changes in the base business,
Okay.
including a significant increase in marketing and selling investment. They're projecting that at 9% to 10% of net sales.
Investing more in brands, okay. Hits short-term profit, but maybe helps long-term.
That's the idea. But it does impact the FY26 numbers. And there's also a normalization of some one-time benefits they got in FY25. Things like incentive compensation returning to more normal payout levels. Some of last year's boosts just won't repeat.
Got it. So tariffs plus increased investment plus lapping some one-time gains?
That sums it up pretty well.
And what about those divestitures you mentioned earlier? Pop Secret, Noosa Yogurt, how do they play into the 26 outlook?
Right. Selling those businesses is expected to reduce reported net sales and adjusted EBIT by about 1% each.
Okay, small impact on the top line.
Yeah, but critically, they also expect to be dilutive by about $0.04 to adjusted EPS in fiscal 26.
Dilutive, meaning it reduces earnings per share.
Exactly, because they're selling off businesses that were contributing profit even if they weren't core to the long-term strategy.
Right.
But despite all these challenges, tariffs, investments, divestitures, the company's aiming for continued momentum in meals and beverages and hoping for stabilization in snacks, especially in the second half of the year. And they expect some modest positive net price realization pushing through some price increases.
Got it. Okay, so we've kind of journeyed through Campbell's recent performance, their strategy map for the future. It's complex.
It really is.
From, the comfort of soup boosted by home cooking to the crunch of a fancy Milano driven by innovation, they're navigating a lot.
Indeed. And while they face these significant, pretty unavoidable headwinds, tariffs, inflation that will hit earnings near term. Their proactive focus on aggressive cost savings, plus strategic investments in brands and innovation led by what consumers want. It really highlights their long-term vision.
Trying to balance it all.
Yeah, trying to meet our evolving desires, premium stuff, new flavors, health, simple comfort, all while managing these big external pressures.
Okay, so here's where it gets really interesting for you listening. Considering Campbell's commitment to new products, pumping more money into brand support to fight these economic pressures, how might your own grocery cart reflect whether these strategies are working or struggling in the next year?
Good question.
Are you going to be drawn more to the comfort, the familiarity of their old school brands? Or will these new flavors, these premium offerings, grab your attention, even in a tricky market with potentially higher prices, something to chew on next time you're wandering the aisles?